Hello, everybody. It's 1:30, and now that I see Mr. Jim Hickey has joined the group, you're making me a little nervous there, Jim. I didn't see you.
We
But
like
we
to
welcome.
keep you nervous, Robin.
Well, that's where I do my best work.
Right.
So welcome, everybody. Thank you for sharing part of your day and devoting time to being together and collaborating and learning. And we are going to hear from Jim Hickey here in a little while. But before that, I've asked three of our collaborators to introduce themselves today and tell us who they work for, how maybe they got there, a success story or tip or trick that works in their agency, and then something that they're struggling with or a question that they have for the group. So I'm going to start, if I could, with Miss Maggie Flores. She works for Agent Ben Flemke down in Owatonna. Welcome, Maggie.
Thank you. Hi, I'm Maggie. I work for Ben Flemke out of Owatonna. I've worked for him for about 2 years now. And it kind of started off, I had just had my first child, and he was our insurance agent. And then he said he was looking for somebody part-time. And I said, I'll find you somebody. And he said, no, I mean you. And I said, oh, okay, cool. And now I'm full-time in office since October. Geez, I don't know. I love it here. I mean, he's a great boss and it's a great company to work for. So this has been pretty awesome. Never saw myself working in insurance or even really caring about insurance, but now that I have more of a view on it, it's pretty awesome. And now it seems like a lot more people are interested in insurance and wanting to talk about it. So, so one of the things that I think I was most proud of this year, other than just like growing and learning about a lot more, especially in the commercial world and with life and everything, is learning how to connect with a lot of different kinds of people. I had a lady call, her husband is a farmer, and my husband is also a farmer. So we were able to connect about that. She's a stay-at-home mom. I was a stay-at-home mom. So we were able to connect. And it started off with just a rough estimate for her husband's new business insurance. And it ended up with his business, her business, their home, their auto, and life policies for their family of 6. So that felt really good, just by being able to connect with her, that we were able to help her with all of that business as opposed to just the one. To chatting with people, and they usually have a lot of questions that are in regards to life and commercial, and I'm just not quite there yet with it. So I was just kind of curious if anybody else has had experience with that, like a good way to kind of divert those questions without sounding like I don't know a single thing about it. Yeah, that's kind of where I'm at with it.
At least on my computer, Maggie, you cut out a little bit. So what I hear you asking, correct me if I'm wrong, is a good way to divert those questions. I'm assuming back to Ben, right? Like,
Yeah.
Does anyone have any guidance for her how you handle that of rephrasing questions and veering them to another person?
Well, this happens to me all the time with farm, all the time, because I don't know anything about it. So a lot of times I'll just say like, well, I'm 95% sure, but I want to make sure I get you the right answer. I'm going to double check with Jim and get back to you, or I'm going to double check with the underwriter or whoever.
Anyone else have any tips or for Maggie? I'm interested, Maggie, how you started a conversation with the insured that you helped bring into the agency. Did it just kind of come up, or did you have, how did that look and feel in the beginning?
It started off with her just asking the very basic questions. Her mom is insured through us and referred her over. So we just kind of let the conversation happen naturally, got all the information about the husband's business. And then she had little ones in the background that I could hear. And I think one of them was being fussy. So I just kind of commented like, oh man, somebody's ready for a nap. And she had apologized. So I just told her, don't apologize. There isn't a single phone conversation that I can get through with my kids around. So we talked about that. And then she talked about how difficult it is to be a stay-at-home mom. So I was able to sympathize. And we had just talked about, the difficulties of working from home sometimes with kids. And it just made her feel really comfortable being able to talk about that stuff. And she asked what else we did. So I told her basically everything. Anything you need, just let me know, girl. We'll see what we can do. And then she said that, she's been with her company, but she doesn't really know the person too well. And she really likes to know the people that she works with. So, it ended up being about an hour and a half long conversation, but we got a lot of business out of it. And she feels very comfortable and very safe and very confident in our abilities now. So
I
Yeah.
love that. You found the common ground and then just built on that.
Mhm.
I think that's what a lot of people really desire. Want to be seen, be heard, and have their issues handled in just a kind, respectful manner, which sounds like you fit the bill on all those points. I think also that we have Crystal Guzman. I'd ask Crystal to introduce herself. Crystal.
Hello, everyone. I'm Crystal Guzman. I work for Johannes Agency out of the Wilmer office. We also have another office in Olivia. I've worked for Paul since 2015 with a little break in there for a couple of years, but I came back. And my biggest tip and trick is I would say to make sure you communicate and document as things are happening. As I know I've done it in the past where I say, oh, I'll get to documenting that. I just got to finish up this. And then you either forget to do it. And Paul's biggest words are, if it's not documented, it never happened. So make sure you document as you go. My biggest pain point is I was actually just talking to my coworker Alana yesterday about this, how banks keep asking for information and you send it, and then a different person will ask for the same information and you send it. And it's getting ridiculous that you're getting 3 or 4 phone calls to send declaration pages or property of evidence. And I don't have time to deal with that. I need to figure out how to mainstream that and figure out where to go with that one.
I think one of the biggest challenges, I concur with you, Crystal, lately is that a large part of our job is doing other people's jobs, it feels like most days. And I really applaud you because I'm sure that this is a scenario that you guys are facing multiple times a day with underwriters, like you said, mortgagees, additional insureds, whatever the case may be, that's requiring just tenacity and patience on your part. So kudos to you. I don't know if there's an answer, Crystal. Someone chime in if you have figured out how to educate bankers and bank people.
I mean, they should be getting this information at renewal if they're listed on the policy, correct? I mean,
Correct.
That is my total understanding of it, and I shouldn't have to be supplying it 3-4 times for them.
No. Jim, what's your opinion on that? Like if we do not supply it, so we get a call from a mortgagee, they want the evidence of insurance, like Crystal's saying, and we don't provide it, what ramifications? Is it just ease of doing business? Something might get gummed up if we do not provide that?
So as long as they're listed on the policy, that always overrides everything, whether they get covered, whether they get a documentation piece of paper or not. I mean, if they're listed, they're listed, they're an additional insured, they're getting paid. If their loss happens, that bank is getting the check paid out to both parties, right? So from that aspect, it's, probably not a big deal from coverage. The two things you run into if we're talking home and probably auto also is sometimes if some of the banks are pretty stringent, right? If they don't get proof, they start putting force placed insurance on. They take out a insurance policy to cover their portion of that home loan or the auto loan or whatever. And then that one gets kind of mucked up because you have to fix that one behind the scenes. Once the insured gets a additional bill, that's probably 30 or 60 days later for this force placed insurance. They're going to come yelling at you, right? And then you got to work with that bank directly to show it, hey, we did have coverage in place, sending decks and get them to write that off. And so it's better to do it up front. I will tell you the mortgagee process for the big banks with all of the carriers is probably not what all of you may think it is. They do not get a copy of a deck sheet at all. Most of our major carriers, I'm talking the nationals, National General for sure, Nationwide, Safeco, regionals might be a little bit different on this as they're not as high tech, but all of them do a monthly run on a sheet of paper that's kind of like a 3x5 card, and that's what the bank gets. They just get a little 3x5 card or a 2x4 card electronically. And you can imagine if you got like Wells Fargo, US Bank, these big banks. I mean, we probably tend to deal more with little regional banks, which is helpful. But if you're with a national bank, that's where it really gets messed up because they're getting these things electronically by the thousands across the country. And somebody has to go in there and kind of, whether it's a computer or whatever, try to align policy numbers, names to their mortgages. So I'm not defending them in any way. They're painful. It's just that's the process behind the back scene where things get lost. And then you got a lot of different people in those banks, and it's kind of like underwriting, right? Sometimes they don't communicate with another underwriter, and we gave them the information twice, or getting agents appointed. I mean, Robin's pulling her hair out on the same thing with carriers. They're just really, really, really bad at customer service right now. Even on these appointment processes with some of these new carriers, I mean, we're pulling our hair out. I don't have much to pull. Robin's got a lot to pull, but so I kind of equate that. And how to solve that, if it's the local regional bank, I think that's a phone call, and you kind of got your person, right, in Owatonna, or you kind of get to know those folks. If it's the national banks, that's a little more painful. I mean, I think all you could do is just get the email addresses of where they want it, send the proof, document you did it over and over until they get it. So,
Robin, can I say something?
Yeah. Hi, Erin.
I have a Excel spreadsheet that lists all of our lenders with the websites and the phone numbers and the faxes, so that I can just go to ihaveinsurance.com/agent and I upload it, send it off, and it's just done. So I've tried to make that easier on myself by just having all the information in one spot rather than like, oh, Wells Fargo, how did I send that there again? What was their website? Everything's in one spot. That helps me out.
Would you mind putting that in the chat, that website? I know probably everybody is aware of it.
Sure.
But just put the website in chat. I
Okay.
like that you're being proactive, right? You're trying to subvert some of those phone
Mhm.
calls. But I do want to say that some things that we do on a daily basis that seem repetitive and not important, I think this is a good case in point that when you are tenacious and you're just, even though sometimes we grit our teeth and just, why are we doing this for the third time? I think this is a good example, like Jim said, that possibly there could be a problem down the line, not because of anything you did or your office did, but because of someone mishandling it on either the carrier side or the bank side. You are doing a service for your customer that's very important, because you're just streamlining the process. You're making sure that no problems arise in the process of verifying their insurance. So what seems little to other people, things like this for me it's always a good example that of how important you guys are and that you really grease the skids and make sure that things go smoothly. So Crystal, thank you for doing it the third and the fourth and the whatever time. And thanks for bringing that up. That is a good point. And welcome as always. I had also asked Vicki Harrison from Agent Mike Panka's office to introduce herself, but I do not see her in attendance. So we will just bug her next time around to introduce herself. Before I release the hounds, I release Jim onto you with all of his knowledge in his head. I do want to say thank you everyone that has been in Total CSR, just taking courses, upping your game, getting more knowledgeable. I really think that it's just something that really helps. Knowledge is power, and this is how we get better at what we do. So kudos. I know I'm sending the shout outs, and I hope that I'm not being too repetitive, but I really just always want to give recognition for those of you that have spent some time in the last week and have really invested in yourself and in your career and in your job. So thank you again for your commitment. This Friday, I will not send out an update. There won't be an update until that first Friday in April because I will be on vacation. So know that I will be checking it when I get back. But if you don't get an email, that is why I'm incommunicado. So with that, I am going to hand it over to Jim Hickey. For those of you that might not know, and maybe you haven't heard all about Jim, but Jim has a long-standing relationship with Farmers Union Agency. He was our farm underwriter at Farmers Union Insurance / National General. And in fact, the year before he joined the agency, he was our company rep of the year. And then I won't say
Pilfered? Stole?
Pilfered. I was going to
Pilfered?
say, what is it when you brainwash? We brainwashed him.
Waterboard?
We kidnapped him, threw him in the van, and drove him down to St. Paul. And it's a pleasure to work with Jim. He is very knowledgeable and just super, super, super hard worker behind the scenes for everybody, for you guys, the agents, the staff. He is a wonderful person and a great professional. So with that, Mr. Jim Hickey.
Thanks, Robin. I probably owe you like $50 for that introduction or something. So Robin's going to the islands, by the way, that you can't even find on a map. So she's incommunicado for sure. Anyway, good to see everybody. Lots of new faces out there too. So if I haven't met in person, we will. But appreciate everybody attending. Appreciate all you guys do, because really, literally, you're on the front lines of what's going on in this market, which you've heard it 1,000 times. Nobody's ever seen anything like this before. So, but you're the front line. You're in the trenches. You're in the foxholes, right? Taking those phone calls and those, people walking in and emails. And I can't thank you enough. I can't by the time it gets to me, it's pretty filtered, right? So I'm sure some of those conversations aren't always the best on why my rates went up and why am I being non-renewed, or why is this company canceling me, or why is this company pulling out? So thanks for all you do on that. I want this to be interactive because it can't just be me yakking here for the next 30 minutes or so. But we were going to talk today about maybe how to work that cross-sell, upsell piece. And I'm going to start a little bit before that, in that I don't know if all of the messages like I give and Josh gives and Jared and Robin to some degree, on our conversations with the agents, are kind of about our direction and the messaging, right? We always kind of have a message and it's been consistent, right? For the last 5 years, for those of you who've been around, or some of you that are newer, one of the challenges we have as an agency is we started out as a captive agency to Farmers Union Insurance back in the day. So 90% of our business was with that carrier, right? And then they kind of blew up on us over the years for a whole host of reasons. We started becoming more independent. We added carriers, Progressive and Secura and FMH, and we can go down the road. We became this independent agency. And our message has been for the last 5 years is to spread the risk a bit. we try to spread that risk out among our carriers. This is the message to our agents, but I don't know if it always gets down to this point, right? And I want you to follow what your agents want to do. I'm not trying to override that. I just want to make sure that you kind of understand where we're coming from and the reasons why. So we want that risk spread. It's just not healthy for an agency, for your agency, our big agency here, or the carrier, to have so much premium loaded up with one or two carriers just because they're easy to do business with, or because you like them, or because they get back to you in a timely manner. I mean, those are reasons to do business with a carrier, but the overall picture is when we're loaded up, and these are the concerns that keep me awake at night, like Secura. Secura is really easy to do business with farm insurance, right? They're just really easy. Yeah, they've had some difficulties. Yeah, they've had to make some changes, but overall, their reps are there for us. Their underwriters are pretty darn good overall. They get things issued. So it's really easy to say, I'm just going to quote it with Progressive, right? And pretty soon we end up with Progressive having 75% of the market share of our agency. And what that does, it does a couple of things. When we have disruption, which we've had a lot of it, Secura has been at the forefront of that. It creates a lot more work for you and your agent, but you guys, because we have to do something with that business, right? The hog confinement business, the poultry business with Secura has to go somewhere. You know, the things they get out of, and I'm not picking on Secura, I'm just using them as an example. FMH was number 2 in our agency, number 2 carrier for premium. We had about 8 million of premium with them. We could have probably had a different workload story and a different profitability story had we had just a little bit of split of premium, not so heavy with FMH. They might have survived this. You know, if all other agencies had kind of thought this way, like, maybe I should try Nationwide. Maybe I should try some Farmers Union with this one. Maybe I should try Liberty on this farm and kind of split it up. So that's been our messaging, and this applies to personal lines too. We just can't rely on one carrier. It's just not healthy for them. They like the premium in the good days. In 2022, they hated it because, you know, it was claim after claim after claim across the whole state. So the ones that have 50, 60, 70% of the premium, they get 50, 60, 70% of the claims. And we kind of see what happened here, right? We saw FMH go out. They had a lot of premium with us. We see Secura making big changes. They have a lot of premium with us. So as we're moving forward, our messaging to the agents is spread that business. The PL Rater has, when everything was open, and it will get open again too, and it's going to be sooner rather than later. I do know that. So, but the PL Rater does that for us on the personal line side. When you input it into the PL Rater, I'm sure most of you are using it. If you're not, probably should be. Even today, as few carriers that want to write business, it's still a huge tool in helping us spread that risk, because you don't have to enter that information into 10 different carriers. You just put it into one system and it comes out somewhat accurate. It's not perfect by any means, but it does allow you to say, okay, I'm going to Safeco with this one. They came out pretty good, and Westfield with this one, and Western National with this one, right? So it's the PL Rater's doing that for us on the personal line side, which is very, very helpful when we look back from where we were 4 or 5 years ago on personal lines. Farm lines, it's kind of up to you and the agent, right? And I would just say from that standpoint, for long-term profitability and retention, it's not good to be moving people every year. It's a lot of work. It's a lot of work for you guys, having to requote when carriers pull out, or because they have to take a 40% rate. We got to quote it every year. It's also not good for the insureds. It's really bad for the insureds, actually. Coming from the underwriting side, on the farm side, our first question always asked when we were into the gray area on a claim, and there's always gray areas on claims, right, was how long have they been with us? And how many policies do they have with us? That was a determining factor on whether we were going to kind of like be nice folks in the claims department, say, yeah, it's a little shady claim. It's a little gray between the lines, but they've been with us for 18 years. And they got auto, home, and umbrella, or auto, farm, and umbrella. Let's pay it. They've been loyal to us, right? That still goes on today. I mean, it may not be as prominent, but that was like our overriding factor. So when we're switching people every year, they're not getting that longevity or that history with that carrier. And I think it's going to bite us somewhere down the road. Right now, we're doing what we have to do. But I'd encourage you to kind of get into that mindset about, and there's nothing, I'm not picking on Secura. trust me, I like Secura. They do a wonderful job. They're a great partner. But we have probably 5 farms to 1 going to them compared to everybody else. Now, farmers unions pick that up a bit for sure, which is helpful, but I'd just caution you, or maybe have conversations with your agents. Should we try Liberty? Should we try Westfield? Should we try Nationwide? Just kind of one out of those 5, right? And just start trying to help with splitting that book up for profitability reasons and for the insured. If we can split it up, that's going to bring stability to all the carriers. So that's retention and profitability is our message this year. Notice I didn't say new business. You guys know how hard it is to write new business. It's hard enough to retain right now. So we always want new business, and there is new business happening on personal and farm lines for sure. Farm lines is more open than personal lines. And we've always had an emphasis on new business. This year on personal and farm, it's retention and profitability. The profitability piece is the key, because we've had far too many carriers. Some of you have had this happen where if you're not profitable, they cancel appointments. That's what's happening. So we've had a lot of that. If you're not active with them, or if you're unprofitable, they're taking the appointments away. And the last thing we want is a shrinkage of places to go with risks, right? So Safeco's done it to us here this year and last year. MSA just did it. IMT has done it. It's across the board. And that's stemming from profitability. So we have to be the eyes and the ears and kind of the field underwriters on the ground to make that change happen. And your front lines, we're the eyes and ears of the carrier. And I know you run a really fine line here of having to take care of the insured, but balance that out with the carrier needs, right? And I'll have agents tell me, some of the agents you work for, that say, well, I work for the insured. You do. You work for the insured, but you also work for the carrier, because without the carrier, you don't have insureds. And that's kind of what what we're running into a little bit right now with this market shrinkage. So it's a fine line. It's a really hard balance that you guys have to do. I appreciate you doing. I think you do a great job at it. Going forward, you're seeing it happen, right? The deductibles going up, the ACV roofs, the cosmetic damage exclusions, buybacks of siding. I mean, it's just running the gamut. So you kind of got to work through that with the insured. And there's times, like right now is the time to, there's certain insureds out there that I think every one of you would throw a party if they left you. Now's the time. It's not about, I got to do everything I can to keep this insured. That's just a pain in the keister for me. Now's the time. It's pretty easy to get them to move if you want them out. And we all have those insureds. We all know them, right? And then there's probably insureds that you really like. They're really good customers, but they have just been a losing proposition for your agency. It's claim after claim. Good people, great people, just bad things happen, right? Just things happen to them. There's that core group. Hard to let them go too, but those are ones that you kind of have to say, do I really want to fight on this one? They got 6 claims in a row. I had a Secura one brought to me last week, a milestone, trying to place it. 4 claims in 2 years. 4 claims. I mean, they weren't window chips. These were non-weather claims. So, it's like, okay, how much do you want to fight to try to place that insured in this market? And they're really good people. I get it. But it's hurting us on profitability. That each one adds up. That one added up in pretty big ways. So, sometimes it's great people, but it might be time to try somewhere else. So you kind of got to know that fine line. But that's our message this year for personal lines and farm. If we can write new business, hey, by all means, write it. Write it smart, qualify it. Make sure we got the deductibles up. Make sure the roof ages are correct. We need these carriers to be here for us long term, so we all are viable long term. And we kind of have a duty to do that up front, And it's always been kind of easy to say, well, I don't know, I'll just put the roof year at 2012. That's probably close, right? It's probably not working now. I mean, I can't tell you how many machine sheds I see that were built in 1990. 1990 must have been a record year for machine sheds, just because you have to put that into the quote. And it's like, okay, it's about 30 years old, right? Well, it might be right, but it's probably not. So, we kind of want accuracy on that to help all with retention. It does help with retention and profitability. So that's the message if that hasn't been communicated. I don't think I can share a screen. Can I, Robin? I wasn't going to do this, but
I don't think so because you're not part of our
Okay.
core group, but if you want to email it to me, then I can share it.
I don't have it saved, so it's just staring at me here. It's okay. You'll just have to listen to me walk through it, okay? So,
All
and I
right, well,
can do that. Anyone wants to jump in at any time, let me know. So our
Jim,
theme
before
today was,
you move on, I just want
Yeah.
to, that's just another feather in all of your caps that having to think about all of this is so, so important. When those people are sitting across the desk from you, you know, it's really hard to say no, right? It's really, really hard to say no. So I just want to validate you that that's another hard part of your job that you guys are doing on a daily basis. So again, thank you.
Yeah. It's so apparent to me getting to work with 38 of agents and then the support staff. And this is like a number one huge quality, right? Our agents and all of you care so deeply about their insureds, way deeper than probably what I would have ever imagined before being in the business. Probably no one else has that relationship, right? Some of you are in small towns, they're kind of your friends, you go to church and whatnot, there's that bond. So it's really hard. I mean, I've had this conversation with a number of you, of the agents. It's hard for them to say no. You're so used to helping, and we've always had a solution up to this point, up to this year, basically, or end of last year. We've always had a solution. We've always had different carriers willing to take the business. We can always go to E&S. We can always do things right now. And this is the first time in 28 years I've been in the business where there are some people we're not going to have a solution for this year. I mean, and that's a hard thing for you and the agents to accept and walk away, like tell somebody in your town that you've had for 12 years, I'm not going to be able to help you. And that's a tough one. And I fully appreciate that. And I know how difficult that is because I think from the conversation with the agents, they would help that customer for free. It's not about commissions or what they're being paid. They would do it for free if we can help them, right? I mean, they just do the work. You would do the work. So that's a really tough place to be in. And we're in that right now in some situations. So
It is a hard, I'm just gonna interrupt for a second. It is a super hard place to be in, but since we all do give such great customer service, even if you know that customer feels bad if they have to leave for price too, or if we can't just place them as we rewrite from Secura or whatnot, but the asks to give the opportunity to contact them in the future to revisit this a year from now and explain to them how fast the industry is changing is huge. And you know that those people have your relationship with, they're going to look forward to that call for you. Maybe you can save them money next year. Maybe you can get them a better product than they currently have. So if you haven't created a win back campaign of some kind, if you cancel a policy, set it on your calendar for 11 months from today or whatever. Make sure that I'm sure most of you are, but make sure you're doing that still, even in this market, probably more in this market than any other time.
Yeah, precisely. So, and we have all the information, right? We have their deck sheets, we know their dates, we know their coverages. And they'll all take a phone call or from you or email. So it's that keeping in touch piece. So Joe Harmoning said it best a couple of weeks ago. He's like, I'm on my third round of people coming and going. Like they've left me 3 times over Joe's 25-year career, right? Even not including these hard times that we're kind of in here, this hard market. So, you know, that does happen and they do come back to you. And in this market, like I said, I'm optimistic by the end of the year, it's going to look different than what it does today. Things are improving. I'm feeling it. I'm feeling little cracks in the windows here. So, in a good way, cracks. So, you know, this is temporary what we're going through, but it's painful going through it. So, once again, we appreciate that. And that's a good point. Keep in touch. Just keep in touch with whatever we use, Agency Revolution, whatever it is. So, and follow up and they'll come back. And sometimes, you know, the first thing I always tell an agent, and you guys know this, is it's always put the insured first. It's always do what's right for the client. And if doing what's right for the client, I don't feel Fair Plan is probably a great place to go if we're out of markets. I feel that State Farm, American Family, Farmers, Allstate, maybe an independent, another mutual or whatever, that's doing what's right for the client. That's really hard, right? But I think in some cases, if you have relationships with some of those folks you may know in those other captive companies, or another independent that has a different market, you know, it's kind of like working together, right? So Lisa Valiant has done this brilliantly with an agent in her neighborhood that only has 3 town mutuals for farms. All of them are either non-renewing, getting rid of business, or just raising rates really drastically. So she's been working that pretty well. That agent's just, I want my customers taken care of, right? I don't have a home firm. I don't want to put them in a fair plan of any kind. And, you know, I'm seeing that on the other side coming to us. So it works both ways. So keep that in mind. Okay. So what I did yesterday randomly, this is totally random. I went in Eclipse and I pulled a Secura Milestone Gold deck sheet. I know who it is, but I'm not going to tell you who it is, but it's just a total random deal. And I went through it just as a layperson, a little bit knowledge of insurance, saying, okay, what can deck sheets tell a story, right? You can kind of build a story off deck sheets. You get to know a lot of information about a person based on their deck sheets. And I just find that always fun and fascinating. So this one I went through like, okay, where's my opportunities here? It's 4 autos. It's 4 drivers, husband, wife, 2, what I would call youthfuls, although that's going to be a talking point here. It's a primary residence, a secondary residence, and umbrella. They're paying 11.4 on this prior renewal. So it's a pretty nice account, right? So I start going through this one by one, line by line, saying, okay, where's my opportunity if I had to kind of get these insureds on my side, cross-sell or upsell, become the risk manager? Because people are looking for great customer service, great advice, and they're willing to pay more for that. I know I am. We can all have the stories about the bad customer service, right? So, and you get stuck in the 30-minute phone tree, press 1, press 2, listening to the music play 45 times, you know, whether you're doing a bank or whoever, Amazon, whatever it is. So your health insurance carrier, I mean, it's just lacking. So it's not for everybody, but people pay more, right? People pay more for that good service that we provide, that you provide. So there are your price shoppers. We have our price shoppers, and price is important. It's not the overriding factor with all of the insureds, as you guys know. So it's about getting the right account, right client, giving them the right service. And we can kind of get off the price subject a little bit. Still got to be competitive, still got to be affordable. But if it's a Progressive auto customer, single car auto, and they're just beating you up because they took $60 rate increase or whatever, is that the one you want to really build an agency off of and spend 3 hours trying to square peg round hole that? Or is it one like this that I just rattled off? 4 cars, 2 homes, an umbrella, 4 drivers. So I'm going to go back a couple of years ago at our statewide meeting. We had a keynote speaker. His name was Chip Bell, Dr. Chip Bell. I'd encourage you, if you guys are on LinkedIn, he posts on LinkedIn just about every day, a little short video or a comment. Chip Bell is a kind of the world-renowned customer service person. He's presented to over 20,000 companies. He works with companies on a contract basis on how to improve customer service. He's a lot of fun to listen to. He was great at our meeting. If you ask your agents you work for, most of them were there. You know, Chip made a pretty lasting impression. So I follow him on LinkedIn. And he had one posted yesterday, a little video about customer service and why people leave you. And you know, his take on that was, they'll tell you it's because of the price, because that's the last piece that did it. That was the last straw. But you're really in an era of indifference, and that indifference starts 2 months, 6 months, a year, 2 years, where they're not feeling the love, right? But they're sticking with you. Maybe they're not getting the service. Maybe the questions aren't being answered to their liking, whatever that is. But he claims there's this period of indifference where insureds are sticking with you, but they're kind of got their eyes like, maybe now's the time. And then the renewal comes and the price goes through the roof. And the next thing you know, they're gone. And if you call them up and say, hey, why'd you leave me? It's because of the price, right? But it, in a lot of cases, is not just about the price. It wasn't about the price. It might have been about something that happened, maybe on a claim, maybe out of our control, but they didn't understand. So I just did this with my own bank. I was with my own bank since 1997. I left them in December. I just couldn't take it anymore. I couldn't take the poor customer service, the closing of the branches. You never get the same person twice. You get into a phone tree over the weekend or holiday. Their website was terrible. And it was one of the most convenient banks for me. They got ATMs everywhere. I don't go into banks a lot, but it just wasn't working. So I pulled the plug, and it's not easy to switch. Let me tell you, it's not easy to switch banks. There were days I was wishing I hadn't done it, but I did. So, and I was in that period of indifference for about 5 years where I'm putting up with them. I'm just because it's convenient for me, but I'm really not liking what's going on. Right. And then I had a last straw with a fraud thing, and that was it. I was done. So, and they never asked me why I left until the day I closed the accounts. Right. And what did I tell them? I just found a better deal. I didn't go into the whole 5-year story. So I think we have those customers, right? And I think you're on the front line of that. So the more you're in tune to those people and the more you can learn about those from just what I learned on this one person's deck page, you're going to know way more. But those are your opportunities to do the, oh, by the way, or have you thought about this, or where's that? So I'm just going to walk through this one very quickly here because time's pressing. Remember I said we had 4 cars, 4 drivers. My youthfuls are born in 2000 and 1996. I'm not so sure those are really kind of youthfuls anymore, in my opinion. They could be youthfuls, right? So where's my mind go, right? I got the underwriting mindset too. It's like, okay, 1996, that's 28 years old. 28 years old. I got 4 cars. Is that person still at home? Really? Are they still under mom and dad's deal? Do they own the car? Does mom and dad own the car? Are they really truly drivers in the household? Or did they happen to move out after college and it's convenient? The car's insured with mom and dad, come into that address, but they kind of got their own place set up, right? I mean, this is the underwriting side. So the 2001 at 24, maybe, maybe they're just graduating graduate school or working, living at home, driving to and from work. But that's my first question, because there's an opportunity right there. There's an opportunity to do it right for the insured, and help them get their kids off on their own, which I have that problem too. So it's hard to get a kid off a cell phone plan, by the way, just letting you know, when you get to my age, they never want to leave the cell phone plan. So, and then it's also doing the service back to profitability for the insurance company, because I get this call once a week. I either get it from a carrier saying, hey, you got youthfuls out there, don't even live in the household, right? We and you guys battle this. Progressive will throw a fit on this one, right? If the addresses don't line up, there's a reason for that. If they're not truly under mom and dad anymore, they need to be out. It's coming down to profitability, and mom and dad are going to be the ones suffer on that one. They're the ones taking the hit if they have the accident. I mean, they're going to fix everything behind the scenes, but it's hurting us on the profitability side. So that's my first opportunity. And that's an opportunity because they might have an apartment somewhere where now I can get them off on their own and write them a renter's policy and do things right. Or maybe they bought a home, who knows, you just don't know anymore. They moved in with somebody. I mean, there's all kinds of scenarios, but right now, all I have is a 28-year-old and a 24-year-old on mom and dad's policy. So that's first discussion. Second one I go into, they have 250, 500, 100 on BIPD. They do have an umbrella. I looked up the base price of an F-150 Platinum yesterday, which we pass these on the road every day, and it was $87,000. So I look at the 100 and I'm kind of like, if I put that truck in the ditch and I cause the accident, I run them off the road or collide with them or whatever, am I going to have enough insurance there? Not even getting into the umbrella, but if we do get into the umbrella, do I want 2 claims out there? Do I really want to have an auto claim and then have to open up an umbrella claim? Or would I be better off with the carriers that allow this to do this, is take that to 250 on property damage, 250,000, or maybe combine single limit? Because the price of cars are frightening. These prices of cars, as the electric vehicles are coming out, Ford Lightnings and Teslas, and they're well over 100 grand. So if we don't have an umbrella, we have a gap. If we do have an umbrella, we got 2 claims in that scenario. And one thing you don't want to have is an umbrella claim right now in this atmosphere particularly. It's really difficult. The casualty side, liability side of the business is suffering because of the huge judgments and lawsuits and awards that are going out. It's getting tough to, particularly on farm, to get higher limits on umbrellas. So anything you can do to protect that policy by just for whatever it is, $20 every 6 months, put that thing to 250 on the property damage, or go combined single limit might be a better option for the insured. And I know they called you because they didn't like the premium and I just increased it, right? I mean, I get that. I'm going to kind of point out some ways that might bring that down. So that was the first one. The next one is all 4 cars have a 250 collision, 100 comp, and a 0 glass. I calculated out the premium on that. And we get quite a bit of savings just by going to a 500 on both collision and comp. We get a really good savings if we go to 1,000, you know, relatively speaking. I've got a 2019 GMC. You know, that's a pretty expensive pickup. I don't know if $1,000 is that unreasonable offering to an insured that's driving around probably in a $50,000, $60,000, $70,000 vehicle. I think we might get some buy-in on that, on this particular insured. So there I'm picking up the savings, right? I think we need to look at the full glass premium coverage. Full glass is really expensive for every carrier, and it's getting more expensive because the windshields are more expensive because they have technology built into them. If you got 4 and 6 cars, this full glass on this was $600 every year. Maybe a good deal, but they haven't had any glass claims in the last 5 years. So could they self-insure for the oddball window that they might crack and go with the $1,000 comp deductible that would pick up, right? And there I got some savings there if it works. It's not going to work for everybody. A lot of people are passionate about full glass. So, but it might get you a little savings, but help you with some of these other opportunities. The primary home was insured at 511,000. The secondary is at 377. They had 2 ATVs on there. The ATV premiums were $452. Couple of things about ATVs, UTVs, and boats on the homeowner's policy. I would advise you right now, the opportunity there for a couple of reasons, as I spoke about, get those off the homeowner's policies or auto policies. It's a really bad deal because if you have a homeowner claim, most of the carriers are pretty unforgiving right now. Whether it's an ATV or a boat, it's on the homeowners. It's coming on the Clue automated. Second, if we go over to a company like Progressive, they've got some bells and whistles on those coverages, you know, full replacement costs. They pick up some contents. There's lots of things that they offer, probably going to be in the same premium range. And they don't report to Clue, and it protects the homeowners. So I think they're always going to have a better experience on a claim side with a Progressive or a Foremost or somebody who has a specialty wreck vehicle policy versus just throwing these things either on the auto or particularly the homeowner. So, but I'm more about protecting the insured to be able to buy insurance in the future right now. And a wrecked vehicle claim on the homeowners is going to be a problem. So we've already seen it happen. Roberta's seen it happen here too. So that would be an opportunity. It also protects against well, I had all my contents on the ATV or the boat. Now I got to open up a home claim for that as well, right? If you have them on the auto or here. Whereas you can pick that up over at Progressive, all on one claim. It's not on a Clue report. They don't report to Clue on the wrecked vehicles, and everybody's happy. So they had $70,000 worth of jewelry. That's another one that the homeowners hates. Homeowners claims on jewelry, it's easy to throw it on, right? Get an appraisal, put it on, pretty reasonable rate. They hate it when it happens because it's either going to be mysterious disappearance or theft. that's what's gonna come back on that homeowners. And if you get a theft on a homeowners, you're pretty much done for writing another carrier for 3 years. So, you know, we have Jewelers Mutual available in the state office. We have Travelers available for an inland marine. They will write this stuff all day long, mysterious disappearance. It's the same rate as the homeowners, and the home companies will never know if they have a claim or not. So, you know, I'd start looking at some of these. I'm not talking about a $2,000 ring. That's probably okay, you know, but if you got somebody with some high value jewelry or some scheduled items, you know, we probably should start thinking about, do we need to unbundle this, Robin?
Just to interrupt real quick, just keep in mind though, Travelers has that 25,000
Yeah.
cap for either
Yeah.
individual items or combined. But
They do.
Jewelers Mutual is pretty much wide open.
No cap. Yeah.
I was gonna
And-
ask about minimum premium, or do we not run into that?
So
ever?
Jewelers Mutual is running about the exact same as all of our home carriers. It's about $10 per thousand. That's about what the rate is. A couple carriers are $9.50, a couple are 11. So, but they're right there. You know, if you get into some of these higher value jewelry pieces and whatnot, I just feel like you're gonna have such a better experience for the insured with a company like Jewelers Mutual, in that that's all they do. That is their deal. Versus,
Also, Jewelers Mutual doesn't report to Clue either.
Yeah.
But it is only a replacement or repair policy, whereas you can't just cash out on losing that ring. You will get it repaired or replaced, period.
Is there a minimum premium, Roberta? So what if you have an insured that only wants to schedule a wedding ring? You know, some people don't have a whole long list. They might just
Well,
have like a $10,000
If you look at
ring.
10, I can't, I want to say, didn't we see in that thing that the very minimum would be $100 premium? I swear I
yeah,
saw
I think
that
it's
somewhere.
$100. Yeah.
Mm-hmm.
So the beauty of Jewelers Mutual, yeah, it gets run through the state office. It's a market we just picked up through the Big I. The beauty of it is, if you just want to look at it and see what the rates are, you just go to jewelersmutual.com and you can quote it yourself on 2 screens and get a premium. The premiums are going to be the exact same as if we bind it. It's really designed when you do that for the customer to do it themselves. But if you want to do it for them, or you want to write it for them, you know, you can actually get the rate. Just plug it in and it's going to tell you what the rate is. And then if you want to do it and they think they want to do it, you want us to submit all the, you know, the binding and the paperwork, then go ahead. So,
Jim?
Yeah.
Is the minimum premium with Jewelers Mutual, the $100, is that through you guys, like through the
Uh-uh.
state office, or?
No.
Cause I actually just issued 2 policies with Jewelers Mutual about 3 months ago, and it was only $36 and I think $70.
Oh, nice. I
Well,
was
maybe it's
pretty
a-
certain that we'd seen that $100, but we
yeah,
only looked at it one time. We could be wrong on that.
unless it's, maybe. a
I actually
big
issued my own jewelry on it, and it was like $40 for the year,
Nice.
Yeah.
That's good to know.
so.
And maybe it's a Big I deal. We can check on that, you know, maybe, because this is going through the Big I, you know, as the broker. So I don't think they have a minimum premium either, but we'll find out. But good to know. So, but the
So
rates
what-
I do know.
Jim, I just wanted to say, so what Jim is talking about, for maybe those of you who are not familiar,
Oh.
you could either go to jewelersmutual.com and, like Maddie, just help the insured get a policy online. Then they would just put in their credit card, they would purchase that insurance policy. We would not receive any commission. Or if you want to go just a couple more steps and work with Roberta, we would be able to write it through the state office. It would be agency bill, or it would just be run through the state office, couple extra steps, and we would get a small commission on that. So it's, you know, really what's best for the insured, because it's not a lot of money eventually with the commission. So that's what he's talking about, as far as we can access Jewelers Mutual through our professional association membership with the Big I of Minnesota.
Perfect. Yeah. And the bigger picture there was kind of trying to save these homeowners and auto claims to some degree. With some of this ancillary stuff, I know it's really easy to bundle. I know it's really convenient for the insured to have one company, one policy, one billing, right? I mean, we've kind of preached that over the years, but we're in a market here where in some cases unbundling is better. I mean, you guys are doing it. We're writing Foremost Homes, Progressive Auto, RLI Umbrella, right? I mean, it's really what we're having to do. I think this is temporary. I know it's temporary. We'll be back to whatever normal looks like in a couple of years for sure. But right now it's about taking care of the insured, make sure they're covered. And if unbundling and moving some of these things over, I think long-term, jewelry, ATVs, UTVs, boats on a homeowner, an auto, a travel trailer, whatnot, is a terrible, it's probably something we should have never been doing. It's what the industry did. I think it's a terrible idea. I think we just have to get those over to those specialized companies that they know travel trailers, they know motorhomes, they know ATVs, you know, the Progressives, the Foremost to some degree, you know, Nationwide Power Sports, maybe IMT, you know, Haggerty comes to mind. I don't know how many policies I see that'll have a 69 Camaro sitting on a regular old auto policy. That's a terrible idea. Yeah, just from me, who's a car buff, knowing some of these carriers that their adjusters, they're not sure if they're doing a 2019 Chevy pickup or a 69 Camaro, right? They don't, I mean, you know, I'm not gonna pick on Nat Gen, but I wouldn't have a classic car with Nat Gen if that was the last insurance company on earth. I just don't think they have the expertise. I don't think they have the service. I can't talk the lingo. Haggerty can do that. Those folks, that's all they know, right? And the premiums they'll probably come out the same. They're gonna have a better experience. They're gonna have replacement cost. I mean, we had an agent with a Corvette, you know, that had just a really, really nice Corvette that we went round and round. I went to the mat with a couple of companies, with the company he was with on this one, to get him what it was worth. Because they were just adjusting it as a regular 2008 Corvette when this thing had like 5,000 miles on it, undercover, you know, not used. You know, Haggerty, there wouldn't have been a question asked. So, so these are the mindsets, I think, as we talk about upsell, cross-sell in this marketplace. Yeah, we're probably going to maybe end up in some cases asking for a little more premium. There's ways to offset that with these higher deductibles, certainly on some of these. And maybe there's some coverages they don't need, right? Do they need equipment breakdown? I can't tell you how many policies we have with equipment breakdown. When I was underwriting, I had 3 claims in 10 years. I mean, it just doesn't get turned in. People don't even know they have it. They probably have claims, but they don't even know they have it. You know, their water heater blows up. They just pay a plumber and they never think about their homeowner's policy. And now in this day and age, do we want to have that? Do we want to have that particular claim coming back to haunt us if we're trying to move this insured a year from now and we got a water heater claim, right? So, you know, maybe equipment breakdown isn't important to them. Maybe it is, but these are the conversations that I think you can do. Oh, by the way, we could probably look at this, and is this important to you? Now, this home at 577 has 5,000 water backup. I carry 50,000. I got a full finished basement. The price of construction and finishings, that one's more important to me. I'll take the $1,000 deductible on the car all day long. You can move my rings and whatever you do, but get me 25,000 of water backup, because that's going to cost me to finish that, pull that out basement out, right? I mean, these are the kind of the things, like $5,000's not even going to get a furnace put in if they have a water backup. These are and it was always easy to do, right? That's what's included, or you just tried to stay competitive for whatever reason it got this way. But I think we have a little bit different mindset now, you know, and really working with these insureds that value you, value us. They're in a little pain point with the renewals coming out. And there's some opportunities. And the one that works best is, oh, by the way, you know, and this could be, this particular one had a discount for being a physician or medical professional. I don't know if it was the husband or the spouse. You guys would know that. But what's the other person do? You know, maybe it's a contractor. Do they have business insurance? Do they have a group health plan, you know, that we could look at and do? Oh, by the way, do you know we sell group health? Medicare, they're 60 years old. You know, they're probably getting to that point where they should probably start thinking about, maybe I better learn about that, right? You could be the first ones. We have the resources here to offer you that. So the easiest one was taught by Progressive last year. They're like, hey, you're insuring all the pickups. Just ask them if they have a hitch. I mean, that was so non-threatening. I went to Quick Trip this morning to fill up with gas. And what do you think they had? The lady asked me at the counter, and they did it across the board. Do you want a car wash? I'm checking out, just getting bad stuff for me that I shouldn't be eating or drinking. I pump gas, I go in and pay, and she's like, do you want a car wash with that, right? I mean, they just know people are gonna say, yeah, I do need a car wash. So that's the non-threatening cross sell. So, hey, do you have a hitch on your pickup? Pretty non-threatening. I mean, the insured doesn't even know where you're going to go with that one, right? And if they say, yeah, the next question is, what do you pull? I mean, maybe we know, maybe we don't. 53% of the boats are uninsured in Minnesota. So we don't know if they have a boat sitting out there. Did they pick up a boat? Did they think it's covered under the homeowners, right? I mean, we got all those people think they know insurance, but they don't. You guys do. So, you know, those are the things that you can kind of keep your eyes open. And I'm getting flagged by Robin that we are like at
Oh, by
2:30.
the way, remember
Oh,
when
by
I
the
told
way,
you an hour
sorry.
would go by so fast?
You
Mr.
should-
Jim always, he's so conscientious. He wants to put together 5 slides and, 8 PowerPoint presentations. I said an hour is going to go by so fast. So here we
It
are
did.
at 2:30. I want to be respectful of everyone's time, but I think this is a really good illustration. So Jim went in, he printed off one account. If you have your expiration report printed out and you're watching your renewals come in, I know you can't do this for each account. That's not reasonable, but every once in a while, like pick an account and kind of review it. If you need help, I'm sure Jim would take the time to walk through that. Same with Roberta, like, hey, let's just do a case study and they could give you some suggestions. These are great things that we can get some added premium, we can get some added coverage. And then, of course, the best practice administrative person in me always says, if you change or take away a coverage, make sure that you're documenting your conversation, preferably have the insured initial next to, a declination, and then get that into Eclipse. And that's just going to protect you. So it can't be that, oh, she told me I don't need that coverage. And then the next week they would have, the 1 in 100 million, chance of having a claim. You would have your documentation in Eclipse and say, no, that's not really what it was. I have it right here. I talked to you about XYZ and you initialed. So make sure you're documenting that. So luckily, we don't have any more time to talk about best practices. I hope that you guys have a good rest of your day. I will
Hey,
post
Robin.
this. Oh, yes.
30 seconds. I need 30 seconds because
All
this is the front line. There's a couple of changes to Minnesota law. One of them hits April 1st. The messages are coming out now. You guys are on the front lines. And I think you're probably going to be dealing with the majority of this. The first one has to do with the Family Protection Act regarding watercraft. So the law changed, whereas most carriers only covered medical payments for somebody else other than the named insured and household members. So if I got hurt on your boat, I'm covered. But if I get hurt on my own boat, I don't have any medical payments. That's just the way it is, right? May 1st, that law has changed. Minnesota changed the law where insurance carriers have to offer medical coverage to anybody that's on that boat, whether they're household members or not. I'm getting carrier sign-offs right now. I just got one this morning. Roberta's got it, where they have to include this in the policy language. It's included, and I don't like what they're doing, but they're giving the insured an option to sign off and decline that coverage for a very, very small discount. The discounts I'm seeing is they'll save between $18 and $16 if they sign off that I don't want medical payments coverage for my household members. I would encourage you, and I'm going to get the word out to all the agents, do not let one person sign that off. There is no reason that premium and that little bit of savings and the harm that can come from that 5 years from now, where maybe they have new kids or grandkids or whatever to become household members, right? We can't control that where they wouldn't have coverage if they got hurt on that watercraft. So I would let those things renew with the broadened coverage and the little bit of rate increase they're going to take. That's it.
That's it?
Oh, and the dog law changed May also. So most of the carriers are doing away, or well, no, not most. They all have to do away with the restricted dog breed list here in Minnesota. Gone. They can only ask the question, have you had a legal bite or an aggressive documented legal bite about a dog, right? So But you don't have to do anything with that one. That one's automatic. So we can insure all the pit bulls we want here in Minnesota.
All
No
right,
offense to
well,
pit bull owners either. I was just
I was
picking
gonna
on
say,
pit
I
bulls.
want everybody just to go forth and be a pit bull today, but a nice one. Thanks, everybody. I hope
Thank
you have a
you.
good rest of your week.